Welcome to the insurance series. I am William Freitas, and today we've got Kym Beazleigh on the show. Kym, welcome to the show.
Thanks, Will. Thanks for having me, mate. Been a long time coming.
It has been a long time coming. Kym's been talking to me for quite some time, trying to get onto the podcast. And Kym and I have worked quite closely for a long time, actually quite a long time. So I'm excited to go through that background and get a feel for how you got into insurance. But also today I'm keen to chat about professional indemnity. You know, it's an area of your, focus that you've been specializing in for a long time. And when you and I worked together at Zurich, I definitely lent on you quite a bit when it came to professional indemnity. So looking forward to going into that in some more detail. But, you know, for everyone listening at home, if you don't mind, give us a little bit of an insight. Who are you? What do you do? Obviously, you're with Markel at the moment, but what do you specialise in and how did you get to where you are today?
Yeah, sure. Thanks, Will. And thanks for having me, mate. Obviously, been a long time coming, but it's great to be here. So I guess just from my perspective, as you know, I've been in insurance now for coming on 23 years. Been a long time, a long journey, but the years go by fairly quickly. Been in professional risks for pretty much all of that time and had a little bit of experience across both broking at the very start of my career and also in underwriting probably for the predominant part of my career. In terms of, I guess, how I got into insurance, to take the clock back to when I was sort of 18, 19, I probably had two things I wanted to be, and neither of those were an insurance underwriter. So to start with, sort of towards the back end of my teenage years, very much looking to be a professional cricketer. That was the dream. I played a lot of representative cricket growing up in New South Wales and got to a sort of New South Wales under 21s level. And certainly had that kind of dream to be, as a professional sportsman. And failing that, my backup plan was to be a physiotherapist working in sport. And it's funny how things end up. So looking at my first goal, I ended up going to England to play cricket for an off season, which is pretty standard for a lot of Australian cricketers, to then put myself in the best position to try and get a professional contract when I returned. I went over to England, had that season there, came back, didn't work out, didn't get a contract. I'd got into uni to human movement, hadn't quite received enough in terms of enough marks in terms of getting to physiotherapy, and decided that I was going to take a couple of years off and travel around the UK. Went and played cricket again, and ended up working or finding a team whose captain was an insurance broker for Lloyd's,
Right.
and ended up getting a gig in Lloyd's off the back of that.
So you had no previous history with insurance. You didn't know what insurance was, and
Not really, no, nothing at all. Yeah, I mean, even then, maybe buying a little bit of car insurance when I first got my license. That's about it. Yeah.
Let's talk about cricket if you don't mind.
Yeah, sure.
Because obviously, you're probably underplaying. You were quite good at cricket, obviously, and you can quite closely align, I guess, your career in business to what it can be in a professional setting as well.
Yeah.
And I've spoken to quite a few sort of professional sports stars on a different podcast that we have, being the Associates, and there's really close affinity, or I guess things that you can take from a business sense to cricket and various different sports, right? So
Absolutely.
Tell us a little bit about, I guess, what you've learned of cricket as well, and then how you've applied that to your career.
Yeah, it's an interesting question, and I think I've worked previously with someone who remained nameless, but someone I respect quite highly, who said to me, I don't think you can become a leader in business unless you've either played high-level sport or you've got kids. And I guess the logic there is teamwork, and also, I guess, when your children come along, I'm very fortunate to have two of my own, both in high school now. It just teaches you how to be, I guess, more balanced in your thought process and be a real sort of team player. So I think probably the teamwork side, working together. And I was very fortunate. A lot of the teams I played in when I was younger, I was a captain. So I think leadership to me was a kind of natural progression. And it's something I've always enjoyed. I think you have to enjoy it because it's not simple, right? It's not straightforward. You've been obviously running your business for a while now. It's not all, fun and games, right? There are some difficult decisions to make, some hard conversations to have with staff, from my side with brokers, from your side with clients and or underwriters. So I think just being in that environment was certainly something that I've taken into the business world. So yeah.
And so then take us back to starting your first insurance gig whilst playing cricket. Where'd you go to from there?
So that was in London. I started at a Lloyd's insurance broker. So I did 2 years there. They were actually bought by an underwriting agency. So we were acquired by them. So I moved straight into that role. That agency was backed by Canopius, which was my next role in the industry. Moved into the Lloyd's syndicate. And that was kind of, I guess, where I felt I learnt the most of my time in the UK was in that old school Lloyd's environment. So I was sitting at the box, Monday to Friday, an hour or two a day, and learning to transact business, face to face with people. And I think that's something that's always stuck by me. You've known me a long time. I always prefer to catch up and talk things through and talk about opportunities and what's happening face to face. And I think that transition for me was a really important one to learn how to transact business. It puts you on the spot. You have to be able to articulate what it is that you're doing and the decisions you're making. And so for me, that was just an incredible learning experience.
And do you feel like you, I guess, learnt a lot about insurance more so as an underwriter or in that broking role?
I couldn't really opine on the broking side. I wasn't really in it long enough. Right. So, but what it did do is give me a flavour, just a small flavour for that side of the fence, right? And I've always personally tried to put myself, whenever I'm having to, deliver a message to a broker or a client, always try and put myself in their shoes to before I deliver that message, and try and work out how will they perceive that message. So
that's interesting. And I asked that question because, as you know, I started in underwriting and now I'm in broking, right? And very much the way I view risk or view client businesses is I'm viewing it as an underwriter or how an insured would want to view it. And as a broker, then I can provide advice around how an insurer would want to, I guess, underwrite for that risk, what risk management they'd want to see in place,
sure,
what's acceptable, what's not. And that's why I asked that question. But obviously, probably in terms of seeing, where you were in your career, that probably wasn't the easiest to akin to.
Yeah. And I think I've learned a lot about that over time, right? As you get older, you talk to people like yourself who have been on both sides of the fence. And I think that's a critical thing that you learn as you mature in your career is making sure you see it from all angles before you make that ultimate decision. So yeah.
And what sort of risks were you doing at Canopius?
It's predominantly PI. So I was working in the PI team. So looking across things like your traditional professions, construction, engineers, architects. Back then, Canopius were writing a lot of valuers, so I learned a lot about what not to do when it comes to some challenging PI. And I think, back in those days, insurance was very traditional. People didn't look at sort of alternative risk transfer solutions, or it was just very much, here, I have a single valuer. Would you like to write this? What's the price, right? As opposed to, looking at it, everybody knows it's a challenged industry. It's had some historical problems and tends to flow up and down with the economic conditions. And back then it was very much just pricing individual risks. I think the industry has moved on now, looking at alternative structures, discretionary funds where you may potentially group a certain class together and try to find a different solution. So I think it's definitely, the world has moved on in terms of what I was doing, but it was traditionally those historical classes of PI that still exist today, ironically. So Not a lot has changed in terms of what we're looking at. I think just the way we look at it and the way that clients look at risk has changed a lot in that time.
And what was your next step from there, effectively? Did you come back home or did you stay in London for a bit longer?
Yeah, so on a personal note, my wife fell pregnant. We'd got married while we were over there, and she fell pregnant with my son. And we just decided that we wanted to bring our kids up in Australia and give that a crack. So that was August 2009. We made the move back home. Been home ever since. So that was kind of the catalyst. And when I got back, I'd loved working in the Lloyd's market, but I was just at that stage of my career where I sort of thought maybe I can take what I've learned in London and move on to some bigger, more larger international organisations. And so my time back here, my first role was back at Chubb. I was at Chubb for about 3 years. Chubb at the time weren't big on PI. They're big now, but at the time, PI wasn't a huge part of what they did until they had the Chubb-Ace merger. And so when the opportunity came to focus more on PI at Zurich, which was my next move, that was what I jumped at. Bigger organisation, global company, and I get to do PI as my kind of day-to-day, which was my background. But I'm very grateful for my time at Chubb, having learned a lot about D&O, management liability, and all those kind of classes, which has helped sort of round out my skill set a little bit in the local market. And at Zurich, gave me an opportunity to see a bit of the world as well. I went to a couple of conferences, one in Miami, one in New York. Did the same at Chubb, had a conference at Warren, New Jersey at the head office. So those things really appealed to me when I first came back to really round out my skill set, looking at larger risks, looking at global risks, and really trying to I guess, build out my expertise in a few other areas than what I was kind of used to.
And just to add to that, I think when you and I were both at Zurich, that's where, from a PI perspective, it was quite a broad range of different risks that you would look at, really.
Yeah.
Tech PI, construction PI, you name it, right? It's miscellaneous PI. I think that was a really good opportunity to sink your teeth into PI. I know from my perspective it was. A lot of my learning came from those underwriting days at Zurich, so I imagine you feel the same way.
Yeah, absolutely. I mean, you'll recall very vividly, Zurich had a very broad appetite. We wrote a lot of business, but we were also on the cusp of a hard market, right? We were right in the depths of a really challenging soft market at the time. There was a lot of competition. There was a lot of pressure on rates. And I'm sure you remember, I think, we probably took those first steps at our time at Zurich in trying to do our best to try and turn the ship around a little bit in terms of that market in the financial line space. And I'm sure you'll recall having to come off a couple of accounts or deliver some rate increase news to some brokers and some clients. And it was almost like a foreign concept at the time, right? We'd had sort of 10 or 15 years of soft market conditions. So that breadth of risk and product class and everything that we saw at Zurich was, it was just invaluable in terms of your overall development. And then also you parlay that into that changing market. For the first time in, as long as anyone could remember, we were having difficult conversations with brokers and having to manage messages about turning rates in the opposite direction when not many other people were, right? And I think, again, that's just another fantastic learning experience that you've got to be able to articulate your views on a risk and why it should be priced in a certain way. Just an incredible learning experience.
And I think this is really important for junior brokers who are listening to this conversation, because when you're part of a organisation that has such a broad risk appetite, it's such a benefit because you have an opportunity to write risks. But I think where underwriters can get caught, it's like, well, actually, we need to chase top line budgets and we've got to write everything. Whereas I know in those days, I was often called the wood chopper because I declined too many risks. But what
did I label you that? I can't remember.
I think so.
Maybe, yeah.
But mate, I'll tell you what, it definitely taught me a lot about risk management. What did you expect from a client as a base minimum, and what did you really like seeing, and which risks would you go hard at, and which risks would you withdraw from and exclude various different things. So that was a very, very good learning experience from my perspective, and no doubt anyone who was there at the time.
Yeah, agreed. And fundamentally, as an insurer, we're remunerated on our ability to make profit, and it's a fairly simple P&L when you lay it out bare. Your revenue has got to cover your expenses, your claims, your commissions. There's not too many different levers that you have to consider when you work out, what you've got left in the kitty at the end of the day. And at the end of the day, on your balance sheet, on your P&L, fundamentally, the largest contributor to your P&L as an insurer is your claims. How much you're paying in terms of claims, in terms of your percentage ratio that goes into your combined ratio. So the key is to write what you think is good quality, profitable business at the right price. And it's, that's really as simple as that. It's difficult in execution, and you're always subject to market conditions. But I think the key is to constantly just focus on what's within your control. Is it rolling out new products? Is it looking at realigning your portfolio, if you've got a mature book, if you're a new startup, where are the growth opportunities? What are you learning from what's happened in the past, from what you've done wrong yourself in prior roles, and what the market has probably not got quite right. So yeah.
Yeah, perfect. And moving on from there, I guess we can sort of make a comment that Zurich no longer are in the professional indemnity space, but where did you go to from there?
So from there, I had a really wonderful opportunity to join a company called Allied World, who are now a lot more well established and well known in the market than when I first joined. When I first joined Allied World, they were 15 years in existence. They were launched in Bermuda in 2001 and were coming into Australia around that 14-15 period. Had a bit of a false start. It had some people come and go, and came to me in 2016. And I guess I'd been craving. I'd done sort of 7 years back in Australia working at global insurers, and I'd sort of, got to my mid-30s and thought, sort of start to look back on your career a little bit. I had a couple of young kids by that point, and you start to think in your spare time. And I realised I probably enjoyed the greater part of my career when I was working in that Lloyd's syndicate entrepreneurial environment. And I looked at the Allied World opportunity as a new market. It was kind of, where do I go from here? Do I kind of stay and keep building my career at Zurich, a big international, some great career development opportunities locally, overseas, etc.? Or do I sort of take a chance on an MGA or a smaller global insurer looking to launch in Australia? And the Allied World opportunity was really compelling. And so it was an opportunity to build my own professional risk portfolio from scratch, be a part of a small branch in Australia, contribute to the broader business, looking at, office space, other areas that, you just never be involved in if you're working at a really big organisation, because there's a division for that, right? And when there's a division for that, it's someone else's problem, right? When you're a startup and you're looking at building something from scratch, even when it's an international carrier setting up in Australia, if there is a division for that, it's based overseas. And so you have to do a lot of the legwork up front to bring, what you're looking to do to the table. And so that experience really broadens and rounds out your skill sets. So I moved to Allied World to do that. Was very fortunate to set up the Australian professional risk book as the market was turning. Sometimes you're good, sometimes you're lucky. I think I joined Allied World on the day the professional risks market was turning in the hard direction. And, we still had to make sure we had a clear strategy, a clear appetite, and not get picked off with some of the, again, looking at what had gone wrong in the past. So it was still really hard work. Very fortunate with the market conditions, though. And after a year and a half, I was asked to also step up and look after the Asian part of the professional risk portfolio. And so for that last 5 years when I was at Allied World, got to broaden my horizons and work the Asian market for the first time, which was another incredible experience. And couldn't be any more grateful to Allied World for the opportunities they gave me in terms of learning how to run a P&L, expanding my horizons in Asia, testing myself as a leader, looking at other lines of business. And the last thing I did there before I left was involved in a project to open another office in Australia. So started to look at leases for offices and what it took to get a P&L to make sense when you launch a new branch. So just incredibly grateful for those opportunities.
And if you don't mind, let's chat a little bit about the Asian market if we can, because I guess a lot of people listening to this podcast, there are various different people listening to this podcast. Businesses out there who are keen to understand risk, and also people in insurance who are keen to talk about professional indemnity, how to become better brokers or better underwriters. And often those insurance industry professionals are thinking, where's my next step? And if it's not locally, they're often thinking London. And it's almost as if sometimes the Asian market is that middle ground. I've never had any Asian market exposure, so I'd love to hear your perspective and get a feel for what is different about that market. Obviously, when you think about international firms, Australia is often included in the Asian bucket. And Australia covers a huge portion of that Asian bucket. But I'd love to get your thoughts on that Asian market.
Yeah, I mean, it's incredibly dynamic. It's completely different to the UK and Australia. It's a lot more transactional. It is a unique challenge. And having worked in London for 7 years and then come back to Australia, and after another 7 or so years, probably 9 years, then being asked to look after an Asian part of my portfolio, it was a steep learning curve. It's a completely different engagement, and I probably, put my hand up to say I first entered that opportunity or that role thinking I could just drag and drop the way that I managed my team and dealt with my brokers in Australia, and it's absolutely not the case, right? And it was a steep learning curve. It's very much a market where leadership is key. You need to be, people look to you for leadership and guidance. It's probably a little bit less innovation and initiative, but when you set a clear pathway and a clear sort of clear parameters for the team, they really respond, and they like support, they like positive reinforcement. And the market is the same. You have to be visible in that market. You have to be out. When you're up there, you can't just be sitting in the office if you're in a kind of line of business head role. You have to be out seeing brokers and talking about opportunities and setting the framework for the team. And then when you sort of fly back to Sydney, the team feels confident to go out then and execute on what it is that you've been communicating to the market. So it's very much, it's not that dissimilar to Australia in terms of its size. It's predominantly an SME market. Yes, there are some great big conglomerates and global Asian companies, a lot of international companies with Asian operations, but there's an incredible amount of local Asian business that gets traded day to day in the Asian market, never goes offshore. And I think for everyone, that's the kind of golden goose that they're chasing, is that SME retail Asian market. If you can build enough scale and volume there, you become really relevant. And then it positions you much better to ensure some of those more international type risks that sit there in the portfolio as well.
I find that really insightful, the copy and paste of your leadership style here to Asia. It's very, I think a lot of people would think that would work, right? Give us a little bit of an insight into, I guess, what your leadership style is like and how you had to shift that, because naturally some people lead by example here, particularly in Australia. But I think that might be a slightly different approach. Did you have to be a little bit more authoritative, or I don't know what the word is? You tell me.
No, I think you're right. My kind of default leadership style is one of empowering my staff, allowing people to make decisions, take projects, take initiatives and run with them, make underwriting decisions, and learn from their mistakes if they make some, right? And you will make some along the way. I've made plenty, and you do learn from them. I've just highlighted one that I've put my hand up, when I first took on that Asian role, and I've made other mistakes in my career, and you learn from them, as long as they're not catastrophic, and how to sort of work your way out of them, and also have the right people around you, right? The right network. Really, really important to have mentors and support network and people who you can just reach out to and just bounce ideas off, right? And I know you and I have done that a lot over the years, and you're very quickly getting to a point where I'm going to have to kind of start coming to you for some ideas because I'm getting a bit old and set in my ways. So, but I think that empowerment piece is critical. I think people like to feel that they're contributing and making decisions and feel supported to make decisions. Your job then as a leader is to set the framework within which they can make those decisions. And as long as that's clear, communication is critical. You set the framework, you let people go off and run with it, and you're just there, right? I'm there if you need me, if you need to speak to me, or you want to bounce my ideas, or if you need me to completely take something over and try and do it, that's okay as well, right? That's part of being I guess almost part of your journey as an individual, is to know when, great, I've got this, as opposed to I think I've got this, but I just need some input, or I absolutely have no idea what I'm doing here. I need to go back to the start and really seek some proper advice. So, leadership style very much hands off. Try to let people feel empowered and get on with their day to day. But everybody's different, right? Across every team I've ever managed, there's different personalities. I've managed people. When I started at Zurich, I took over a team, a corporate team. I was the youngest person in the team. Every person I took over, existing staff, they were older than me. And some of those people had gone for my role, right? That's a different proposition to stepping out and doing an Allied World or doing a Markel, where you get to build a team from scratch. So I've had the full kind of spectrum of career challenges and opportunities as a leader.
So let's dive into Markel then. It seems like that journey definitely set you up for another great post in setting up Markel, really, or adding to that locally. So tell us a little bit more about Markel.
Yeah, incredible company. And I think, I've been here almost 2 years now, and just really, really aligned with my values. I talked a little bit there about empowerment, having a people-led business, being closer to the customer, making decisions, listening to the customer and the broker in terms of what's required in the local market, and not just taking a plug and play, but having, those international products, services, solutions that you can tap into, whether it's dragging a product from London, whether it's utilizing a platform that we have in the US that we're using to trade SME business, whether it's secondments, having staff come out and support you as you build your business here in Australia. But it's a really real people-led business, and it's been almost 2 years. So when we launched, we looked to open up 3 offices here in Australia. Markel is actually, a lot of people don't know, it's very much a specialty company. You won't see us on the front page of the paper selling first-party motor or property or any of those things, right? It's very much a long-tail specialty business, and that's been at our core. We've been around for 95 years, and we're a Fortune 500 company, about $11 billion of insurance, direct insurance and reinsurance revenue in the last 12 months for FY24. A really, really big global organisation, 5,500 employees in insurance, and we have another 15,000 or so in our investments and our ventures divisions, which are separate divisions to the company. But from an insurance perspective, a really big company. And I'd heard of Markel and seen Markel in the market back in the early 2000s when I was in London. They were good at professional risks, but I wouldn't say they were, one of the top 5 or 6 carriers at that time. You fast forward to 2023 when we connected and Markel said they were going to launch in Australia and would have been interested in exploring that opportunity. And they're one of the top carriers in London, growing, exponentially in Asia, and coming to us and going, we want to really build a long-term sustainable business in Australia. And that's pretty exciting, right? When you look at it and go, we've kind of done this once with Allied World. I'm only 7 years into the journey and still had a lot to achieve and to contribute there. But I think just the speed with which Markel wanted to do this, the empowerment, very much you tell us what to do. You're the local experts. This is your business. Run it like it's your own business. Treat it with that respect. We will empower you to do that, but we will hold you to account for the results. To me, that's a perfect model. That's like you waking up every day with your own business, right? So it was a really, really exciting opportunity. And I think just looking at how we've built out, it's been very thoughtful. We've tried to be very specific in the way that we've built the team. We've started with casualty and professional risks. We're focusing on writing business that tends to stay in Australia. That's why we've opened the 3 offices. I think we've all been around long enough now to know that people like to trade with people face-to-face locally. They like to get things done in the shortest time frame with the least frictional cost possible. So we've hired some great people. We've empowered them, lots of authority, lots of autonomy, but everybody's held to account for their results. So that's the kind of culture that we're looking to build.
And so let's go through some of those risks that you're looking at now. A lot of it is professional indemnity. Is that correct?
Yeah.
But there are obviously other, risks that you're looking to come out with in the future as well, right?
Yeah, of course. So I think, I mentioned the word thoughtful. I think we're very... That's a kind of, a bit of a catchphrase within Markel that sits across the whole business. What we've tried to do, building the business out, is look at doing one thing really well first and then moving on to the next thing. That's across the whole business. But if I look at my own professional risk division, we focused in 2024 in getting PI out to market, getting the wordings right, hiring the right people across Sydney, Melbourne and Brisbane, and getting those wordings out and then moving on to the next tranche. This year it's FI. We've recently launched an IMI wording, Investment Managers Insurance, and we're moving on literally as we speak, to the standalone products that come with FI, so D&O, PI and crime. Then we'll start to move into some other interesting areas like blended products around fintech, IMI with some cyber cover, and some other areas like media where we think we can blend in some cyber and some GL cover. Comtech, these are the kind of areas that we're looking to push into next, those kind of blended products. And then, coming to the end of next year, start to look into that management liability space. an ML type wording, standalone D&O, EPL, crime, etc. So that's kind of where we're at now, Jenny. We're about halfway through that initial product build out. We've probably built out 90% of the people we wanted to hire in the first instance. Finish the products, write some business, and then look at where we go next, I think is probably where we're at.
And some of these products, I presume, are largely already done in the sense that you've got some of these products overseas. They just need to be tailored to the local market, right?
Yeah, absolutely. I mean, one of the things we talk about a lot as part of our we've got a 5-year plan in place, as a lot of global organisations do. We've just launched our most recent 5-year plan earlier this year. One of the things we talk about is something called the best of Markel, and that's about bringing the best of what we offer in other jurisdictions to Australia. And in time, we hope to reverse that on its head, right? And people will start to look at us and go, wow, you guys are doing that really well. We don't really do that anywhere else. That's quite niche and really interesting. We'd love to be in that position, to be having people tapping us on the shoulder and asking us for support in rolling out something that we've done really well here. So at the moment, it's more the other way, which you'd appreciate. But we are obviously doing a lot of our own stuff as well. So even if you drag those products or solutions or services across, we're putting our own local spin on them as well, because that's the business model, right? Make sure it works in your local market.
And so if we bring it back to, I guess, what your specialty is, being professional indemnity, what I guess some areas that you would suggest keeping an eye out if you were an insurance broker, or some of the common mistakes that you see come across your desk when it comes to PI?
Yeah, sure. I mean, where do I start? I made plenty myself. But I think probably one of the things I've noticed over the years is really, a PI policy is really around the professional services description. I mean, it is the window to the policy. It forms part of the insuring clause, and the policy doesn't trigger if the professional services that formulate the claim are not covered in the policy wording, right? Design and construct is a little bit different. It's quite general in nature, but you can still amend it via endorsement. But if you look at those more profession-specific products, such as accountants, engineers, surveyors, real estate agents, miscellaneous professions, I've seen a lot of issues over the years where, one, the professional service description is just not correctly drafted. It just doesn't represent what the client does. Client meetings are so important, right? I'm a huge fan of them. You sit down and these are the type of things that will come out in the client meeting. What do you actually do? What is it that we need to put in the policy so that you've got cover for everything that you do and everybody's on the same page from day one? 12 months is a long time in insurance. And so if you don't get it right at the start, if you're not monitoring it, sometimes it's too late. A claim comes in and they're offering a service that's not included in that professional services description. It's not a position that you want to be in as an underwriter or a broker or a client, right? So I think there's getting it right at the start, but then there's also looking retrospectively. The amount of times I've seen claims where you go, well, that's not covered because that was mechanical engineering, for example, in an engineer, and your policy only covers structural engineering because that's all you're doing now. So it's making sure, as both, particularly as a broker, but as an underwriter, it's asking those questions. What have you done in the past? Is it not just what you're doing now, but what you've done in the past? Claims made policy. What have you done in the past to make sure that that's going to be picked up? And the same thing moving forward, mid-term, if the client starts to undertake some services that aren't covered, making sure they're telling their broker that these need to be endorsed onto the policies. I think it's amazing. It's such a simple thing, and everybody thinks it's simple. My one recommendation there is, if you're the broker, you want to go as broad as possible. So engineering services, that's quite helpful, right? That covers everything. But most underwriters are going to push back a little bit and say, hey, hold on, what does that mean, right? We want to be a little bit more structured and a little bit more, focused in terms of what we're offering. But that is a really important conversation. It's one that's often overlooked. Brokers will go to an insurer, send a proposal form, they will quote, and it will just have their own professional service description. And it's never discussed or stress tested. It just goes, here's a great deal, and you move on. Really, really important from my perspective.
I couldn't agree anymore, because the problem is with insurance, I find, is it can be quite transactional in the sense that clients will come to brokers and say, I need professional indemnity insurance. And like, okay, well, what do you currently do? Cool. And then they put a policy in place. Whereas I think that is incredible advice, looking at what have you done previously, what are you doing currently, and what are you planning on doing in the future? Because I guarantee you, every client we've spoken to, and this is something we do with our process, what are your future goals? Where do you want to take the business?
Yeah.
I guarantee you they're thinking about an additional service or a business they're looking to acquire or a market they're looking to go into, and they haven't really considered whether their insurance is adequate.
They're not thinking about their insurance. They're thinking about growing the business, right? Which is absolutely fine and understandable.
Correct.
Yeah.
I mean, the Australian business landscape is how do we grow? Entrepreneurship is amazing, but no one really thinks about risk. And is my insurance covering me for what I need? And so the professional services description is exactly where we go to work on.
It's the start, yeah.
We give a lot of advice around professional risk services or how it specifically gets noted for our clients. And so an interesting question to you is, where do you think the onus lies on this, right? Because us as brokers, we see it as our value to the client, providing advice around how that particular professional services description needs to be worded. However, in saying that, when you go to an underwriter and say, this is how we want it, there's going to be a negotiation around what the underwriter can and can't include. And so there's a fine line, right? And often each insurer is going to be slightly different. And that's what clients and brokers need to get their head around. Not every PI option is going to be the exact same,
yeah.
Right?
And I guess that's the beauty of the market, right? I've done business for a lot of, many years with a placement broker. Again, remain nameless, but whenever there's we have a really great open relationship and can talk openly around individual opportunities. And his catchphrase to me sometimes, if we get stuck on something or I'm not happy about something, is he says, "Well, KB, it's a market." So, and that's why we have competition, and competition is healthy, right? Brokers and insurers, right? It's good for clients to have options. To answer your original question, the onus originally sits with the broker to articulate what the client is doing and exactly what they need cover for. Then it does sit with the insurer to work with the broker. If you want to write the business, if you think it's a good risk and a quality risk, well, you have to show some flexibility and ability to be able to manuscript and bespoke a professional services description that addresses the client's need based on the broker's advice. It's kind of that simple, right?
100%.
Yeah.
And what do you think it is about professional indemnity that makes it so hard for some people to get their head around? Because, I'm not going to say that I got my head around it right away. I was in underwriting for a good 7 or 8 years, and probably took me the 8th year until I got it right. No, but it is one of those areas or those particular products that not every insurance broker specializes in and or focuses on. What do you think it is that makes it a bit more complex?
I mean, I just think professional risk in general has that added layer of complexity. And I guess if we talk specifically on PI, accountants, they have different professional standards to surveyors, to engineers. They're subject to different regulatory regimes, different industry bodies. Take construction, for example. I mean, people try to write construction PI business from overseas. First thing they need to get their head around is it's regulated differently in every state, right? Everyone's got different rules, regulations, different acts that these companies are subject to. And it's the same across all PI. If you take lawyers, for example, just a recent development around anti-money laundering and the new provisions that are coming in that are going to hold lawyers to more of an account akin to a financial institution. It's just such an evolving landscape in terms of the regulatory and legislative environment. You have to be across all of these nuances and understand these changes. It does bring, and that sits across, if you just take engineers, there's about 20 different types of engineering disciplines. And you've got to understand what each of those do and what it means. And does a project over here, what does that exposure bring? A CBD project versus non-CBD, the size of project, the type of project, whether the services are in-house, how the contracts are managed upstream and downstream. I mean, there's just so many different facets to PI. I think that's what brings some of its complexity.
And I'm keen to chat to you about elements of risk management like contracts and stuff like that a little bit later on. But I will add to that, I think the claims-made nature of a professional indemnity insurance policy makes things a little bit more complex. And I think that adds to your point around professional services and the work that's been done retrospectively. I think many brokers on accounts that I've seen neglect the retroactive date. They see it in, a client doesn't currently purchase professional indemnity insurance. So that's fine. The insurer is going to set the retroactive date as inception, and we're going to include professional services moving forward. Problem with that is, okay, I appreciate they didn't purchase the policy previously. However, there might have been a little bit of time of which they were undertaking some work that they weren't covered for. And really, if they're going to buy a professional indemnity policy, that client's going to think that it's going to cover them for the work that they did previously. And that's where brokers can really get caught out if they're not highlighting it to their client for one, and or negotiating on the other end with underwriters to include that coverage. So I think that makes it a bit more complex.
Yeah, agreed. There are so many different nuances, as you say, and then as businesses that are acquired, are you taking on the past liabilities? Are you not? Again, that sort of transcends across all the kind of professional risks products that are on offer. But and there's as you touched a little bit on risk management, there's multiple facets to it, and we shouldn't find interrogating or understanding or trying to ask questions around a client's risk management as insurers and brokers. We shouldn't find that difficult because we're in the professional services industry, and we're subject to a lot of the same checks and balances. How are you managing your contracts? What are your peer reviews like? What's your authority process like? Who can sign off what? Who do you decide to deal with? If it's a client that's outside of your kind of usual vendor list, what's the process to onboard them? Who signs that off? A lot of the same considerations apply to our own industry. So really it should be something we're kind of used to looking for day to day. And of course, claims. Have you had claims? What was the nature of those claims? Are they things you could have avoided? What have you done about them to make sure that these kind of same circumstances don't happen again? And if they do, how are you going to mitigate it, so that it's not as a costly outcome? So, yeah.
Yeah, and we'll talk to claims in a second, but I think one of the things that I'll add, particularly when I was in the underwriting space, we looked at experience as well, right?
Yeah.
As you said, as brokers, we look at experience. Also, when it comes to construction PI or any form of PI, that is, we look at the experience of the practitioner. And often I find, particularly in construction, there might be a civil engineering firm who wants to enter a different discipline. And that's super easy to do if they buy a company that does something slightly different. But do they have then the relevant experience, or have they acquired that relevant experience to manage that part of the business? And I think that's important.
Yeah, I mean, it's no different to our own industry, right? I'm sort of hitting an age now where I'm still learning. You learn every day. I don't think I'll stop learning until I eventually retire. But you're always looking around to the person, with the grey hair, or the person with the most experience in the room. And it is important, right? We rely on people who have been there, seen things, and got things wrong and learned from their mistakes, as I said earlier, to be able to articulate to you, well, not just you shouldn't do this, but this is why. And here's an example of when I got something wrong, as to, I can actually articulate to you, the specifics of why you shouldn't do that, as opposed to just don't do it. So yeah, I think that's crucial. And it's the same in the client base, right?
Beauty of our industry is we have claims, and we get to talk about them because I think they're great learning opportunities as well. And so I'd love to hear some of your war stories if you have any, particularly around professional indemnity, because they're claims that can span, sometimes 3, 4, 5 years, many years, right? So have you got an example that you've managed recently or managed in the past?
So I'd say on the claims front, one of my biggest learnings, the areas I've had the biggest challenges is where I think there was a great, if I could sort of go back 10 years or so, there was a real industry-wide desire to package up clients' insurance programs and call it kind of like a whole account or a cross lines deal. I think we've learned over time that unless the deal stacks up for the individual line of business on its own 2 feet, that it's quite challenging to try and put it all together and say it's okay because it's all part of one package. As a P&L owner, if you're a line of business head, you're accountable for the loss that sits in your portfolio. And when that loss comes along, there's no allocation to any other lines of business because it was a deal that sat across multiple lines, right? It's fundamentally your your responsibility. That being said, there are some wonderful cross-pollination and cross-lines opportunities that exist where you do it right and you put the right terms and conditions in place. But I think that was a key learning for me where possibly you sort of maybe turned a blind eye a little bit to an element of a program that wasn't great because you were getting the motor and the property and all the other lines of business that go with it. So I think that was a key learning. And the reason I spoke about the professional services description is because I did see quite a large claim that came on where I'd put a very broad definition of professional services, but in my mind, just focusing on the proposal form that I was looking at for that year going, well, great, this is what I'm covering, right? This was back in my early days and ended up paying a loss for I think it was about £2 million during my time in London. And it was because there had been some services that had been undertaken previously, which I didn't know about because it wasn't on this year's proposal form. And therefore, they were covered and I hadn't expected them to be covered. And would I have written the business if I'd have known that? Possibly not. You can never truly say. But I think that was a key learning for me. And now I think as an industry, it's an industry learning, right? I think I'm not the only person who's probably been down that path. A lot of proposal forms now, if any good proposal form will ask, any different activities in the last 3 years, any new activities proposed in the next 12 months, which is a good thing for the client because, again, it just provides more certainty. It stops wasted time arguing or discussing claims that come in. Are they covered? Are they not? It's just a much safer sort of belts and braces approach.
But I have to add to that, I've seen plenty of times on the flip side where clients have said, well, I've put it in the proposal form, surely I'm covered for that. And again, the professional services description may not include that particular service or part of that service.
Yeah.
And that's where underwriters can get a little bit cheeky, I guess, and say, look, this is what I want to cover. And then in the quote schedule, they specifically mention one particular service or an area of service and or exclude it later on, right?
Yeah.
And so I think that needs to be monitored carefully.
I guess that's what the Contracts Act is designed to do, right? Is to provide a bit more protection to clients and brokers to say, well, I've kind of told you about this. If you haven't read the proposal form properly, I haven't not disclosed this to you. If it's on the proposal form, it's disclosed, right? So I think I think that's one of the great things that the Contracts Act has brought a little bit more belts and braces and more certainty for clients over the years for things like that, where you go, I've disclosed this to you in good faith. I've articulated what I'm doing. If you've chosen to kind of overlook that, well, I'm assuming if I've disclosed it, I'm covered for it, right? So yeah, but it is, and this comes down to the broker and the insurer, right? The client is entrusting both of us to get their insurance program right. They're entrusting you to bring it to me and for us to have a discussion using our expertise to work out the right solution.
And look, I've never really been part of a situation where there's been a claim in this instance, but I can imagine most of the onus would lie on the broker in that sense for not picking up whether it's a particular exclusion or whether it's a service that's omitted in the professional services description. I think the underwriter has kind of or can a responsibility in that sense that they've decided to insure this particular part of the risk.
Oh, look, I think I hear what you're saying, but I think as insurers, we want to make sure that we're working with our insureds and brokers to produce the best outcome possible. Yeah. We take a position based on a contract, right? That's all we can do. Intent becomes a discussion, but ultimately you start from a position of what does the contract say, right? And then you work your way from there. And I think that's why it's really important as underwriters, but also as brokers looking at policy wordings. As underwriters, when you're drafting policy wordings, consistency is so important. You want to have, if clauses, definitions, exclusions, if they straddle multiple policies, be they just across, for example, PI, or be there similar provisions in a casualty policy or a D&O policy, wherever possible, it's important to have consistent language, because you'll have a situation where someone will eventually pick up, if there's a claim is declined, you run the risk of someone picking up a policy of yours that's a Markel policy that sits on another shelf, and someone says, well, it says that in that one, but it says this in this one. So what was the intention? So for insurers, consistent policy drafting, and for brokers, looking at that across the product suite, right, and making sure that all the language is consistent and you understand what it means. And if you don't, then you ask, right?
And this may not be something that you know the answer to necessarily, and this is something more so that I'm interested in. You mentioned the Contracts Act and the proposal form. Is the proposal form part of the contract?
Well, it's part of the submission, right, which forms your basis on offer and acceptance and deciding whether or not you're going to insure a risk. So it's all you can rely on is the proposal form and the submission, and you will make your decision based on that, right? So you can only underwrite to the information that's presented to you or the publicly available information that's out there. If it wasn't publicly available and it wasn't disclosed in the proposal form, it's hard to argue that you should have known that it was there as an insurer. But I mean, there's so many moving parts to that, you know, that you could explore, and be a whole nother podcast on the Insurance Contracts Act. Probably get someone who's a lot more qualified to talk about that than I am. So yeah,
I'd agree on that one, just because obviously we're not specific lawyers in that sense. But I raise that point because from a client's perspective and from a broker relationship perspective, we always try to advocate for certainty. Coverage certainty, that is. And so we would never say, okay, what is in the proposal form? You can have some comfort you're going to be covered for that. Absolutely not.
Yeah.
We would always be ensuring that our clients understand that despite what they've noted on the proposal form, what is in the policy schedule and the policy wording is what you rely on come claim time.
Sure.
It's very rare that it's not very rare, but sure, you can look at the proposal form, but from a client's perspective, we want to say, look, there has to be some certainty. And I think that works really well as part of that, you know, relationship between the insurer, the client, and the broker. I think that's super important, that all parties are on the same page and clear around what they're covering, really.
Yeah. And I think that's it's where you can add value as a broker, right? A nice covering email for a submission. I mean, it's invaluable, right? I spend a lot of time reading them. I read that first because it's much easier than trawling through 10 attachments that might potentially form part of a submission. If you're able to articulate the risk or pick up points in the proposal form, and I know we've seen some submissions from you and your team before where it said, I know the proposal form says this, but I've spoken to the client and they've articulated that it actually means this. And I think those kind of things are really important as well, is making sure you really understand your client as a broker and you're able to articulate the client's risk to the insurer, as opposed to, here's a bunch of documents, just give it your best shot, right? So
I'm a firm believer that a little cover email makes a big difference, and someone once told me a humble phone call always helps as well. So I'm keen to get an understanding from you, from an underwriting perspective, what are some of the red flags or some of the key areas that you see in a PI submission that just doesn't stack up or doesn't put a broker's submission on the top of the pile?
I guess, yeah. I mean, look, a covering email with an overview of the risk is always well received. But if you take a step back, just a phone call, we laugh about it, but it's really helpful to just have a quick chat. Hey, I've got this submission. Here's what they do. The amount of times you can sort of say yes or no and save a lot of wasted energy is it's incredible. But also importantly, trying to understand from the broker, is it a genuine opportunity? Is there something the holding market has done that has led to this opportunity? Or are you just trying to find some alternatives because the client has instructed you to go to market and therefore, I just need your best foot forward, right? And that's fine, right? That's what we do. That's competition. So, but it's good to know where you stand at the start of the transaction and then everybody's on the same page. Red flags in terms of PI risks, I mean, they're all there on the proposal form, right? Contracting principles, peer review regime, previous claims, yes or no, size of contract, type of contract, where they're undertaken. You spoke to experience of the client, what they do. They're all, you don't have to go much past the proposal form to look at the focus areas of most insurers. So,
and I think you raised a good point earlier that it's not just the proposal form as well, right? It's what information is publicly available. And I often see where brokers can go wrong is not even typing in the client's email address the website and getting a feel for what it is that they're publicly disclosing as to what they do. Now, often we find clients might overstate what they do on their website. It may be a service that they thought about doing, never really did, or previously did and no longer do anymore, but needs to be included naturally, as we mentioned, the professional service description. And so that's something that I find really interesting that needs to occur.
First place I look, website, just to get a flavour for how the client is projecting themselves and how they're selling themselves into the market, because their website is their window to their client base. So it's getting a great feel for how they're presenting themselves as a risk to their client network or their client base. So very helpful.
And so then give us a little bit of insight as to what your vision is for the future, one in the PI market and two for Markel moving forward.
Yeah, I think for us, I guess I've touched on a few key messages there for Markel and our kind of, next 5-year plan or iteration of our global journey, which will ironically take us through to being 100 years old as a company. So it's a pretty exciting thought to be here when we turn 100. I'm looking forward to that. For us in Australia, the vision is hire some really good people, technical, skillful underwriters who want to be empowered and want to make decisions and ultimately want to take accountability for those decisions. If I look specifically at our line of business, we just want to build out a full product offering for our client base, right? So where do I see that going? I think from a PI perspective, the market is definitely trending towards blending of products. So I think we're moving away a little bit from the old traditional, here's a PI policy, here's a casualty policy, here's a cyber policy, here's a D&O policy. You've only got to look at some of our products that are coming down the pipeline in terms of what they cover. They straddle a number of those areas. I think for clients, offering them something different is always important. When you're new to a market, you've got only a few levers you can pull: service, price, coverage, differentiating yourselves on that basis, right? And if you can just bring a number of products to market in a different way, blend those together, have one product instead of 3, potentially one limit, or you can have individual limits, and just look at doing things a different way. So I think Markel historically have been very good at that, and we're looking to replicate that and go down that path in Australia. And also just looking at emerging risk, it's a big focus area for us. Where are we going? Not just where have we been. We spend a lot of time, ironically, in insurance looking at what happened in the last 12 months. I don't think we spend a lot of time looking at what's happening in the next 12 to 24 to 36 months. And I think that's really important for us. And that's something that we encourage all of our underwriters to do.
What are some of the emerging risks that you're looking at?
I think renewables is probably a really interesting area. And then just the tech space, we recently rolled out a product in London, an insurtech product that sits alongside fintech, commercial tech. You've got other areas that are starting to come online, like medtech. The whole biotech area is a new one, AI. We're just constantly looking at is there somewhere we can be a first mover that positions us as a market leader, but it's a thoughtful, measured approach. We do our due diligence and research on the opportunity, and if it makes sense, we pull the trigger, right? We're always looking at trying to do something that not everybody else is doing. Otherwise, you just end up in the same queue as everyone else, right? So that's a big focus for us.
Agreed. And I'll take it back to what you mentioned around the vision for the future, blended products. I wouldn't say it's just a new thing. I think 10 years ago when you and I were at Zurich, we were already talking about the overlap between cyber and PI. But now more so than ever, where clients are purchasing a cyber policy on one end and a professional indemnity policy on another, 2 different insurers. There's often conflict depending on how that claim is brought, whether it could be a PI, a negligence issue or whatever it might be, or a cyber claim being a third-party liability claim. So blending the 2 solutions and being able to have them transact accordingly for clients and for brokers is definitely beneficial.
Yeah, you're right. It's potentially cost-effective, but it's also, it provides some certainty for the client that if they've got something that might straddle 2 or 3 different product classes, at least they're dealing with the one carrier, right, under the same kind of product and terms and conditions. So, yeah.
Kym, it's been an absolute pleasure to have you on the show. It's been awesome to see the growth of Markel over the last couple of years with you there particularly, and the growth of your career, I guess, really. It's been a pleasure to be a part of that journey as someone that I look to as a mentor in many instances. So appreciate your tutelage, I guess, over the years. And I have no doubt people listening to this show and this podcast specifically on your background and professional indemnity are going to see a lot of value from that. So thank you for coming on the show, and I appreciate you taking time.
No, thank you for having me, mate. And likewise, great to see what's happening at Confio, and look forward to catching up again soon.
Thank you, mate.
Thank you, mate.